Let's look at an example of activity-based costing. Assume a company produces two products, a small and a large. The company estimates its total overhead to be $320,000. It currently uses the traditional method to allocate overhead on the basis of direct labor hours. That's the POR that we know. However, it's thinking about changing to the activity-based costing method. Be lower the company's current information and expected ABC information. So first and foremost, let's go through and look at it from a traditional standpoint, the POR, where we lump everything together. So if we're doing that, we're going to look at the overhead allocation rate, so the POR. We know the equation is going to be estimated total overhead costs divided by estimated total allocation base. Our estimated total overhead cost is given to us in the paragraph in the beginning. It says $320,000, so let's go ahead and put that into the equation. Our estimated total allocation base, well, it doesn't give it to us outright, but we have enough to calculate it because it says the anticipated volume of a small is 4,000 units and the anticipated volume of a large is 9,500 units, and it tells us how many direct labor hours per one unit it takes to produce. Now, we also know that our allocation base is based off of direct labor hours. So really what we're looking for is what is the total number of direct labor hours they're expected to use. So for a small, let's start there. One direct labor hour per unit, that's what's given to us. We're going to multiply that by how many units we're going to produce, or anticipating to produce. So 1 times the 4,000, that gives me 4,000 direct labor hours. Now for the large, it takes us 3 hours to produce 1 unit. So 3 direct labor hours divided per unit. We're going to multiply that by the 9,500 units that we're anticipating on producing. And that's going to give us a total of 27,500 direct labor hours. And if we add the 4,000 and the 27,500, that's going to give us a total expected direct labor hours of 32,500. That's what we're going to put into our equation for the predetermined overhead rate. So that's going to be our denominator. If we divide that out, that's going to give us a predetermined overhead rate of $9.85 per direct labor hours. So that's only part of it because that's the POR. Now we actually have to apply it to each of the products, the small and the large. So again, small, we're going to take the $9.85 per unit, or per direct labor hour, multiply it by however many direct labor hours it's going to take. So again, 1 direct labor hour per unit. That means it's going to cost us, on average per unit, it's going to cost us $9.85 per unit to create in manufacturing overhead. Now let's look at it from the large perspective. We're going to take the same $9.85 per direct labor hour, multiply that by the $3 per three direct labor hours per unit, and that's going to give us a total of $29.55 per unit in order to create the large products in manufacturing overhead. That's the traditional approach. Now let's look at it as if we were going to do the ABC method. So first and foremost, let's go through the steps. The first step is we need to identify the activities. Well, again, granted, they gave that to us. Our activities are right here. We have the assembling of the units, we have the processing of the orders, and we have the inspection. Those are our 3 activity centers. So step 1 is done for us. Step 2 is finding the cost pools. Well, that one's done for us too. It says estimated cost for each of the activities. So they're anticipating a total of $180,000 in assembling of the units as a cost. $95,000 for processing and $45,000 for inspections. So step 2 is done for us. Now let's look at step 3. Step 3 is to calculate the activity rates. So let's break down these and rates. So assembly, we know it's the estimated total activity cost pool divided by the estimated total activity driver volume. Well, our estimated total activity cost pool is $180,000 for assembling. So let's put that in there. Estimated total activity driver volume, well, we have small and large, and we know it's going to be 4,000 and 9,500 units. So if we add that together, that's going to give us a total driver of 13,500, so 13,500 units. If we divide that out, that's going to give us a rate of $13.33 per unit. So that's one activity. Let's do another one. Processing. Same thing, we're going to do 95,000 divided by the total of all of the orders for both products, so small and large. So if we add up the 1,500 plus the 6,500, that's going to give us 8,000 orders. Divide that out, that's going to give us an activity rate of $11.88 per order. Finally, we have the inspections. We're going to divide 45,000, that's the numerator, divided by the total number of inspections, which is going to be 60, and that's going to give us a total rate of $750 per inspection. So that is step 3. Now let's look at step 4, where we're actually going to apply it. Step 4, we have small and large. So we're going to start with the small first. We're going to take the 4,000, we're going to take the rate, $13.33, multiply it by the 4,000, which is specifically for small. And that's going to give us $53,320. Put that, we're going to add that in a minute. Processing, we're going to take the $11.88 per order times the 1,500 orders specifically for small, multiply that out. That's going to give us $17,820. And then finally in inspections, the 750 times the number of inspections for small, which is 25. That's going to give us a total of $18,750. And if I add all that up, that's going to give me a total of $89,890. That's going to be how much cost I'm going to allocate to small. Now let's do the same thing for large. Same rate, $13.33, times the 9,500 for the large. That's going to give me a total of $126,635. $11.88 per order times the 6,500 orders. That's going to give me $77,220. And finally, $750 per inspection times the 35 inspections for large. That's going to give me a total of $26,250. Add that up. That's going to give me a total of $230,105. That's what I'm allocating in total for large. That's step 4. Now the last step is to put this into a per unit format. So what I'm going to do is I'm going to take the total amounts for each of these products, small and large, and I'm going to divide them by the total number of units that they're anticipating to make. So the 88,890, I'm going to divide by the 4,000 units they're anticipating, and that's going to give me a per unit cost of $22.48 per unit. And for the large, the $230,105, I'm going to divide it by the 9,500 units that they're anticipating to produce, and that's going to yield me a MOH per unit of $24.23 per unit. That is how you do an example of an ABC from start to finish.